America's national debt just crossed $39 trillion. The interest payments alone now cost more than $1 trillion a year. That part's not in dispute. At the same time, gold quietly became Canada's second biggest export, right behind oil. Every finance channel on this platform is telling you that means money is fleeing the dollar for the loonie. I looked at the actual data. That's not quite what's happening. And the real story is more useful to you as an investor. Section 1. The debt number is real. Let's not bury the true part. US federal debt is around $39 trillion. Debt service, just the interest, hit roughly $1 trillion in 2026, now one of the largest line items in the federal budget, ahead of defense in some comparisons. That's a real structural problem, and it's not going away on its own. So the instinct to ask, where does the money go if it leaves treasuries, is a fair question. The problem is what comes next in most of these videos. Section 2. The Canada gold number correctly explained. Here's the actual data from Statistics Canada and RBC.
Economics. Gold exports to the UK jumped 76% in 2025, about $17 billion, which is what pushed gold past most other categories into Canada's #2 export slot. Sounds like a stampede into Canadian assets, right? Look closer. RBC's own economists said the increase had more to do with a price surge in gold exports than any change in underlying demand or production. Export volumes barely moved. Export value spiked because the gold price itself spiked, driven by things like a US government shutdown and global trade tension, not by investors rotating out of the US and into Canada specifically. Price up, volume flat. And most of that gold isn't even staying in Canada or being bought by Canadian institutions. It's routed through London, a global bullion trading hub, then resold worldwide. Canada is the miner and the shipper here, not the destination for parked capital. So, gold exports going up is real. Money is fleeing to Canada is the part that got added on top, and the data doesn't actually say that. Section 3. The credit rating claim, corrected, 330 to 500. Second claim, Canada holds a AAA rating. True for 2 of the 3 major agencies, S&P and Moody's, but Fitch downgraded Canada during the pandemic and has held it at AA+ since. That matters because Fitch's reasoning is the more interesting story here. Fitch projects Canada's government debt to GDP ratio rising to nearly 92% in 2026 and pushing toward 98% in 2027, almost double the median for AA-rated countries. Their language was blunt. Persistent fiscal expansion and a rising debt burden have weakened Canada's credit profile, and Canada has a track record of deficit projections landing worse than promised. Which brings us to the most active bond issuance year ever line. That's true, but issuing more bonds means Canada is borrowing more, not that foreign capital is flocking to buy Canadian debt in preference to US debt. You can't use record borrowing as evidence of fiscal strength on one side of the border and evidence of crisis on the other. It's the same fact, and it means the same thing in both places, bigger deficits. Section 4. What's actually true here?
The US has an unresolved, worsening interest expense problem. That part checks out. Gold, as an asset class, is having a historic run globally. Record central bank buying, record prices, and Canada, as a top 4 global gold producer, is a direct beneficiary of that price move. That's a real and investable trend. Canada's own fiscal position is not pristine. It's deteriorating too, just from a stronger starting point. And one of 3 major agencies has already marked that down. There's no verified data in general circulation showing a large-scale rotation of foreign capital out of US Treasuries and into Canadian bonds specifically. If that flow exists at meaningful scale, it hasn't shown up in what's publicly reported yet. The real trade? Gold, not Canada. If there's an actionable idea buried in here, it's not buy Canada as a safe haven. It's that gold itself, the commodity, not any one country's currency, is the thing central banks and price data are actually pointing to. Canada just happens to mine a lot of it. The headline version of this story is more shareable. The accurate version is more useful. If you want the numbers behind your investing decisions instead of the narrative, that's what this channel does. Subscribe to the Wealth Syndicate for breakdowns like this every week.